Hi everyone, myself Dr.S.Dhivya, Department of Commerce Computer Application in the Dr.S.N.S. Rajlakshmi College of Arts and Science Autonomous. This topic we are going to discuss in the types of indirect tax. The types of indirect tax are: indirect tax is a type of tax usually applied to goods and service where the burden of tax can be passed on to another entity or individual to another. So, in the case of indirect tax, the incident and the impact of taxation does not occur on the same entity. For example, we can say indirect taxes are initially paid by the manufacturer or the supplier to the government when then pass this tax burden on to the end user of the goods or service. In contrast to this, income tax is the clearest example of the direct tax where the person earning an income pay by the applicable tax directly to the government. So indirect tax is initially the manufacturer or the supplier, they have to pay tax to the government, and the end user, the tax burden will be followed to the end user. So indirect tax in India as well as the rest of the world, the levied on the import, sale and the manufacture of goods as well as the purchase of goods and the service by individual and the corporation. In India, some indirect taxes are payable to the CGST, while other tax like VAT are payable to the applicable state government. The types of indirect taxes are GST. Before we are comes into the GST, there are so many earlier regiment of indirect taxes, say VAT, excise duty, so on. So under key examples of tax that are part of the indirect tax is GST. GST is probably most widely known a type of indirect tax applicable in India. As the name suggests, GST is applicable to goods and services which are consumed by the individual as well as organization. Was introduced by the central government. Indirect tax submerged under GST. The introduction of GST in India lead to significant changes in the taxation system in India. The One India, One Tax regimen has led to the number of indirect taxes submerged. It replaced GST has replaced so many taxes in the indirect. Some examples of indirect tax has been discontinued to large extents, like we can say service tax. Service tax is nothing but it is also levied by the government provide for the service to the individual or the entity. Subsequently, the burden of service tax is passed on to the end user of the service being provided. So, this tax is submerged. Next, excise duty. When any goods or product is manufactured, licensed or sold in India, then indirect tax is levied in the form of excise duty. The manufacturing firm pays tax and goods return covers the amount from the customer. Excise duty is only applicable to domestic goods only. After introduction of GST in India, this tax has largely been discontinued, only applicable to limited number of goods such as alcohol for human consumption. So, excise duty is a goods manufactured in India and licensed and sold in India. Within the India, when we are selling, manufactured and sold the goods, it is excise duty. This also submerged under the GST. Next, VAT, value added tax. Value added tax for the indirect tax levied on the products sold directly to the consumer. This indirect tax is under the preview the central state tax which paid to the government of India, state central sales tax, and paid to the respective state government. So VAT has largely been discontinued in India subsequently to GST introduction because it is a double tax. So it is submerged under the GST. The benefit of indirect tax is a high level of convenience. Indirect tax do not burden the initial taxpayer as they can be transferred to the end user. So, additionally, state government authorities find it a convenient of levy indirect type of taxes because it is collected directly and helps save a lot of time and effort. Next is easy collection. Indirect taxes are easy to collect as compared to direct tax. Since indirect taxes are easy to collect at the time of purchase is made or goods are transported. Next benefit of indirect tax is wider taxpayer base. Individuals who earn less than 2.5 lakhs per annum are exempt from income tax. So equitable contribution. Indirect taxes are directly related to the cost of service and the product. This essentially means that individual who consumes less pay lower amount of tax, while those consuming more pay more tax. Similarly, luxurious items are charged a high rate of indirect tax, and then reasonable goods, we need necessity goods like essential food and the health, we have a taxable exempted, and the necessary goods we can pay the less tax. So types of indirect tax are GST. The law was amended in July 2017. 17 indirect tax under its purview on the state level: state excise duty, additional excise duty, service tax, contributing duty, special additional custom duty. At the central level, it covers sales tax, entertainment tax, central sales tax, octroi, excise, purchase tax, and luxurious tax. Next is a sales tax. The tax levied on the sales of goods. The union government imposed this sales tax on the interstate sales, intrastate sales also. Service tax, service for the indirectly for the taxpayer like telephone, tour operator, architecture, interior decorator, advertising, healthcare, all these service we have to we will get the benefit of that. Next is a value added tax. The state government collect this category of tax. For instance, when a person buy a product that is important, we pay an additional tax known as value added. So this also submerged. Next, custom duty and outright tax. Levied upon goods imported in the country from the abroad. We know custom duty is the goods we are imported to the other countries. The tax of custom duty is paid at the entry port of the country, such as airport. We have to pay tax on the entry point of the airport. So the rate of taxation is variable based on the product nature. Octroi is charged upon the goods entering the municipal zone. So when we are moving the goods to the one zone to another zone, we have to pay the custom duty. Octroi is when we are reaching the municipal zone, based on that we have to pay the octroi tax. Next, excise duty. Excise duty is nothing but inside the country when we are manufacturing, we are selling the goods, we have to pay the tax. So this tax also submerged. Anti-dumping duty. This is a levy upon goods are exported at a rate less than the standard rate by the nation to some other nation. Thank you.